preparing the tax provision, it's at the beginning of the year when you're trying to finish your financial statements for the prior year, and you often don't have all the information you're going to need when you're preparing the tax return. There's a number of reasons for that, but just know that you're going to use estimates in preparing your provision, and so when you prepare the tax return, there are going to be some differences. These are our RTPs. The rate rec we'll walk through preparing that, and this shows the difference between the company's income tax expense and the enacted tax rate of 21%. So you'll see, based on your financial statement income, if you multiply that by 21%, that's kind of what you'd expect to pay in taxes. But when we do the provision, it's going to be different. And so that rate rec shows you why there's a difference. All right. And so these are kind of the basic steps to preparing your tax provision. And so we'll walk through each of these, going over your RTPs, and then calculating your current year taxable income, which, as mentioned, is going to be an estimate. Computing your ending deferred tax, you'll have from the prior year, you have what your deferred tax asset or liability looked like, and then you're going to compute what it's going to look like at the end of the current year, and the difference will go into our deferred tax expense. When you're preparing statutory financials, you'll also want to walk through admissibility. SAP 101 goes over the guidelines for admissibility. We're not going to cover that in this training, but just know that that is a step of preparing a provision for statutory financial statements. Then you'll want to go over your tax accounts and reconcile those, as well as prepare your journal entry for what needs to be booked as a result of your tax provision. And finally, we'll go over that rate rec that we talked about.